Hello, everyone. Welcome to another Altos Trading live strategy session. This is Richard Van Rich here with Jeff Tompkins. We have Craig Ward also in the chat answering questions, and we are excited to have you guys with us here tonight. We got a lot of good stuff to go over. Crazy market going on right now, and so glad that you guys are here. We're doing this every week just for moments like this. And if this is your first time on, you'll notice that your microphone is muted. That's so we can all hear Jeff and I talk. But there is a Q&A box, so if anytime tonight you have any questions, we'll pause throughout and also answer some questions at the end. Just put those in the Q&A box instead of the chat box, and we'll see those throughout the evening. If you have to hop off for any reason, don't worry. This is recorded and will be available in the members area later tonight and also on YouTube sometime tomorrow. If you have any questions about your account, access the Zillion, Trade Trend, Trade Alerts, anything like that, email support@altostrading.com, and we'll get to those tomorrow. So before I bring on Jeff, let me read the disclaimer. Trading securities and options involves risks. Prior to buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to the time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee that subscribers will mirror our performance. Performance numbers shown are based on trades users could enter based on the trade signals. All right. That being said, let me bring on the man of the hour, Jeff. You there?
Hey,
How you doing?
good.
Guess what? I got the haircut back.
We go to the same barber.
I know, man. Company haircut. But you have more sun on yours than mine. I just shaved it back, so I got a little cue ball action going today.
It works. Yeah, we need a discount, I think, there from the company barber. Same
Seriously.
haircut, double discount.
I know. Exactly. How things going?
All is good. So great to have everybody on, and we've got a lot to talk about tonight. So we're gonna focus on bear market rallies because we're in an official bear market. We talked last week about the sell-off levels, what to watch in terms of rebounds, and we've seen that just over this past week. And so now what we have to navigate is where's the market going to rebound to, where are we going to find resistance, and then how are we going to navigate it from there? So a lot of good things to cover. So that's going to be the focus tonight, is the bear market rally, which is what we refer to these two as in terms of bear market scenarios, and when we actually see a significant rebound off of a support level. So that's kind of the situation we're in right now. We're going to cover that.
All right.
All right. So we'll start out with mapping out our levels. We'll do our market overview over the major indices, the S&P, the NASDAQ, the CBOE volatility index. And then we're going to, again, talk about how to play bear market rallies. So we won't get into a whole lot of strategy on that, other than identifying levels and navigating these types of scenarios. And then, of course, we can deploy many different types of strategies from these types of scenarios. But the idea here is to give more of a high-level overview of what's going on in the market and how to map out your strategies for current market conditions. So that's going to be the focus. And then we'll share some symbols, look at some charts together tonight, and wrap up with Q&A. So let's see, we've got Craig on. Craig and Richard will be fielding questions in the chat and the Q&A. If you guys have questions along the way, we do pause periodically. If you're new to the session, feel free to type those in. We prefer Q&A because it's easier to monitor and to relay to me, and then allows all the other members to see those questions, and then we'll answer them publicly. If you have something that's more of a account related question or a personal question, you can put those in the chat directly to us. And I think that pretty much covers it, right, Richard?
That'll do it.
Cool. All right. So flip off the camera here, and let's get over to our charts. And we've recently updated our refresh times for Zillion. So we're going to be using our Zillion charts more frequently in our live sessions. So we've got our data updates for the S&P. So we've seen a big rebound, and these are levels that we've emphasized in past live events, our weekly live events on Tuesday. And we've talked a lot about the 4,000 level. We've dipped below that. And actually, let me zoom out just a tad bit here. Oh, a little too much. All right, so what we're basically looking for here are past levels of buying in the S&P where the result was some degree of significant move to the upside from that level. And without taking buying and selling into consideration, because they are closely monitored institutional levels, we look at the century marks. So the as an example, the 900, the 3800, 3700. We look at half century marks, would be like the 3850, the 3950, and then millennial marks, which would be like 4,000, 5,000, etc., are very important levels. And then when we find actual price action that coincides with those, and there's a significant move from that level, we want to pay extra close attention. So we've seen that just over the last 4 trading days. In fact, 4 trading days ago at the 3850, which is a half century mark. And so let me notate this for you here. So back in March of last year, we see that there was a lot of buying off that level after a retracement, or basically a little bit of a down move in the context of a broader up move or uptrend. Okay, so that happened again. And again, to emphasize the importance of mapping these levels out, rather than be late to the game and somebody who's getting in too late after a move has occurred. This is really the way that we believe is to identify these buying and selling opportunities ahead of time before the move already takes place. And so we've also emphasized in last weekly live sessions the importance of money management and scaling. So if you were not in attendance, please watch those, because it is crucial to use those in conjunction with technical analysis, because we can't know for sure, obviously, where these turning points are, but we can know with some degree of high degree of accuracy, I think, that they reside at these levels. And when we incorporate money management strategies like scaling into positions, as we really focused on last week and I think the last couple of weeks, they can really be beneficial. So we didn't necessarily know if the turning point would be at 3,900, 4,000, 3,850, but we, by looking at these half century marks, and millennial marks, know to some degree where there's a higher probability of reversal, whether it be to the upside or the downside, in this case, the upside. And once we know that, we can use money management like scaling to build positions, for instance, in this case, long positions, and give ourselves more probability of selecting an opportune average entry price on a rebound. But we're in bear market territory, or we've been in bear market territory, so it's an important consideration, and why we need to focus on bear market rallies, because although we might be in a bear market, that doesn't mean there can't be rebounds and opportunities to buy. So I think that that's an important consideration, with the caveat that we may not see, and I believe we won't see a strong uptrend, sustained uptrend. So looking at the left side of this chart from early 2021, when we're in a green divergence cloud, we have this really nice sustained, well-defined uptrend that then obviously stalls out late last year, Q4 last year, and then into 2022, and shifts into bear market territory. So you see this green cloud shift into a red, and then reverse back to the downside. So this was a major inflection point in the market after this decade-long sustainable market, and so the whole market structure has changed. It's shifted, and we need to act accordingly. So not to say that there aren't long opportunities. We just need to be very strategic with selecting those. And so I think that these half-century mark, century mark, and millennial marks are great potential turning points for these. We just need to watch out for overhead resistance. And so that's what we're going to map out now, because we do have significant overhead resistance, and it's right around the 4,100, so century mark level. But we did get past the half century mark today. So 4050 was actually, generally speaking, a century mark carries more weight than a half century mark, but in this case, not so. So if you look back to late April, early May of last year, we've got a lot of demand. So a lot of buying occurring around that 4050 level on the S&P, and then a big subsequent move up, right, in price. So so what happened today is, and if you look at the last 2 trading days, so it's a little bit small here in the chart, but a lot of resistance at 4050 broken through today. Okay, so actually gapped up and broke through, bullish. So we made it past 4050, but now we've got 4100 to contend with. Okay, and it might be a little bit closer to like 40. It's a little above 4100. Let's see what the low here. 4114. So almost 15 points above the 4100 level. So 4100's something we've got to get through this week for this rebound to follow through. But if you look what happened off of this 3850 level, the half century mark, in the context of, to reemphasize, like this is, oh, sorry, let me get that. What we talked about in past sessions, anytime a market hits a level, what happened off that level in the past? Well, going back to March of last year, we see that price moved off 3850 all the way up into a little bit over 4800. Big move up off that level. So no coincidence here that S&P bounced from that level again and has since moved up. And of course, past results don't indicate future performance, so we don't expect that S&P will then go on to hit 4,800 again. That's not the point. But what it means is that there's demand at 3850 or nearby. And so we've seen that, and we've mapped these levels out in past sessions. And if you've been watching, if you've been a regular viewer or watching the recordings in the YouTube channel, you were prepared for this, right, as a potential turning point in the S&P. So what does this mean going forward for the rest of this week and beyond? Well, we need to be watching 4,100 as resistance. Now, what makes this a little bit easier on us is that we came close to that in today's trading. So we hit 40.90.72, not quite 4,100, but we're close. So the good news is, and if we want to get a little more precise, we should use the low from back here on February 24th at 4114. If we can bust through that, and more specifically, if we can close above that level, that's going to lend some more bullishness. Now, the caveat there is we do have a little bit of resistance. Well, maybe not a little bit. We have significant resistance around the 4150 level to contend with if we do, close above this 4114 level. So we've got a couple layers of resistance. So let me map that one out here real quick. But I think that if we can get through this resistance zone, so I'm going to basically mark that from let's see, 4100 to 4150. So it's a half century mark zone. If we can get through that, then we have more room to run. We've got another at least 50 points because our next major resistance is at, actually, let's see. actually at a quarter century. So 42.25. And this one's strong because so look at the resistance there from April last year, and then July as support, and then early this year, or mid-January roughly, support. I got a little bit there. So we've got a resistance zone here to contend with. But for long positions or bulls, it's positive in the near term. But if we make it up to those levels, to those resistance zones, we've got some things to encounter there that could turn things bearish again, which I think in the context of what's going on geopolitically, rising interest rates, inflation, that's probably going to happen, and we're not, we're likely to see these lows from this year tested again, but we're speaking near term, right? So if we can get up to these resistance zones, I think those might be good shorting opportunities. But for now, this is what I would label a bear market rally. So 3850, we're back above 4,000 within a matter of 4 trading days. That's a bear market rally. We can confidently label it that. So that's kind of the context of what we're looking at, and we'll dig a little bit deeper into in our ticker roundtable, like individual securities and how to navigate this. But that's the S&P. So let's take a look at the NASDAQ real quick. Similar picture. Get out of this. And we'll use the QQQ, the ETF, as the proxy. I'm personally a little more bearish on tech, and I've talked to some of my colleagues and money managers and experts in the field that feel that there's more of a tech bubble. So this is actually a really crucial time to differentiate between the indices. Usually in strong bull markets, we get a lot of cross-index correlation, where they just really move in tandem, like the Russell 2000, the S&P, the NASDAQ. And in times where secular markets shift from bull to bear, or we're not in a strong bull market, you can see more diversion between indices. And typically, like if you look back at like the tech bubble in 2000, you see tech get hit really hard, but that doesn't mean like that small cap companies that are in the Russell 2000 or the Dow 30 or any of those like more solid companies that are not so speculative in nature don't hold their own and end up doing a little bit better. So the tech sector tends to get hit harder. And in these types of market environments, I tend to be much more bearish on tech than on, like a Procter and Gamble or, a small cap Russell 2000 stock. So I think we have more to overcome in the tech sector. Looking at the Qs, we've got strong resistance around 320. Also kind of right around the 310 level, which we're bumping up against this week. Now, if we can make it through those levels, that's going to be more bullish for tech. We've got some strong resistance at 335. Let's see here. All right, so 335 out of all the 3 resistance levels here is probably the strongest based on touch points, moves off that level. But also 320, very strong. And 310 is our closest. Sorry, losing my voice, been on the phone all day, but it's closest level to encounter. So we're getting pretty close to that level today. So high at 306. So through the remainder of this week, I think 310 is what we really are looking at as resistance. If we can break through, then 320. And again, this is on the Qs, the NASDAQ 100 ETF, and then 335 is a big one. All right. Let's look at the VIX real quick, and then we'll pause for questions on the market overview. Oh, I'm on the wrong. Is that not coming up? Well, there, I don't know why that wasn't coming up. All right. All right. So to lend more weight behind this bear market rally, that is the topic of our session tonight. We've got a retreat in the VIX. So in past live weekly sessions, we've talked a lot about this 35 roughly to 40 resistance zone. Okay, so certainly in bull market conditions, but even in bear market conditions that are separate, they're more sustained bear markets. So obviously we hit a peak in the S&P early this year and have been in more of a sustained sell-off over the course of 5 months going into May. 35 to 40 is a good resistance zone for the VIX. Whereas like if you're in a market crash like we saw back in 2020 during the COVID crash, you could see very extreme VIX spikes. In that case, we saw one up into around 90. So much more extreme, but this also gives us a clue of the market conditions that we're in. If we're in a steady downtrend and the VIX is not spiking above this zone, then but it's staying elevated, then that kind of tells us, hey, we're in a bear market, especially in conjunction with the peak to trough sell-off in the major indices. And again, we talked about that a lot last week. So if you were not in attendance last week, please watch the recording there in the YouTube channel. So we've retreated from this zone, as we've talked about, right? So that in conjunction with the support that we found in the S&P and the NASDAQ and the Russell 2000 has lended more weight or a confluence, I guess would be a good word for that, to the bear market rally, right? So we're retreating from this 35 to 40 zone, and you can see here that in past situations where we've hit this zone, the market has rebounded, and the VIX being inversely correlated to the S&P has risen. All right, so this is a big clue to us that the market is, for at least the near foreseeable future, going to move up. And not a guarantee, but this is how we put the odds in our favor by identifying these correlations between, for instance, the VIX and the S&P, and using support and resistance to identify buying and selling pressure. So we've got this retreat from the 35 to 40 zone, a move down, and a close today above 26. All right. Let's look at support. So when the VIX has been below 25, we've seen that as a strong resistance level. Okay, but we're not below 25 right now. So this would be, so these areas that are marking as resistance would be situations where the S&P was rising and then might have had a little bit of a sell-off before it resumed its uptrend. Okay, but if we look back to September, October last year, we see it as support. So that's the one I just marked here. So that's what we need to be watching right now. And we actually just saw it more recently at the end of April. We saw support there and a bounce, and there was more of a sell-off on the S&P. So this is a crucial level, 25 on the VIX, to keep an eye on this week because we're very close to it, right? So the low today on the VIX was 25.51. So we're very, very close to 25. We need to watch to see if that holds. If it holds and the VIX moves up off that level, I expect another sell-off in the major indices. Now, if the VIX can close below 25, because that was such a major resistance and support level historically, then we could see more of a bear market rally or a rebound in the major indices. Okay, so this is crucial. Can't emphasize enough that this 25 level in the VIX as it relates to the current rebound in the S&P and the NASDAQ are hugely important to be watching right now. All right, so if you're not using the VIX as a gauge for market sentiment and market conditions as it relates to the S&P or the major indices, it's very, very crucial to use this as a tool. And when we're in bear market conditions and seeing some degree of a rally, we need to know, when is it going to stop? Well, it has a potential to stop around the 25 level on the VIX and the resistance areas I just pointed out on the NASDAQ and the S&P. So if it stops there, then we might see another leg down in the market. If we can get through this, we might see a continuation of the rebound. That's the way of the bear market rally. So I'll pause there and see if there are any questions that have come through and we can address those.
Yeah, I see what's coming through. Nothing has popped in just yet, but I mean, you nailed it. Like, this is a really crucial time right now. Like, we're being at this 25 level, like you said. If it holds and continues going up, then we're going back down. And so yeah, it's a really pivotal area right now.
Yeah, very pivotal, and always look at the context of it. So where did this move come from? And that's a key question that I always ask myself in my analysis of any trading or investing decision. Where did this move come from? Well, in the case of the VIX, it came from that resistance zone. Okay, so that's short-term bullish. And then where is it going to? Well, it's going into a key level at 25, or a support zone. All right, so then the final question to ask is, what's going to happen off that level? That's the third prong that we don't have the definite answer to, but we need to have on our radar and be aware of, because the VIX is, in my opinion, and a lot of professional money managers' opinions, one of the very few key forward-looking indicators of market direction. So if we see the VIX bounce off 25 and start to move back up, that would generally indicate potential move back, another leg lower in the S&P. So it tends to be a leading indicator of market direction in the S&P. So that's why we emphasize it so much in our live sessions, and using it as a tool or a proxy for what happens in the indices. Yeah, exactly. Yeah, Doug says the QQQ looks just like the SPX. Yeah, so the patterns can look very similar, but Doug, I don't know if you were on the last week's session. While patterns look similar, percentages can look very, very different. So last week we focused a lot on the peak to trough sell-off in the markets and the importance of tracking those. So I urge you to watch that if you didn't. But while a pattern can look the same, the percentages can look very, very different, and that's hugely important. So the Nasdaq is down, or if we want to use index ETFs, the QQQ is down far more than the SPY, right? The S&P ETF 500 ETF. So percentages are hugely important and often overlooked by retail traders. But please watch last week's session, because that's a really important consideration. So yeah, patterns can look the same, but if the kind of as a case in point, the S&P could turn around at a 20% sell off, while the Nasdaq might be down 25%. And this is kind of as it relates to what's happening currently. They can turn around at different percentage peak to trough levels. So peak to trough are basically looking at the last all-time high in the market to the most recent all-time low in the market, most recent from the peak. So not the, I shouldn't say all-time low, not the all-time low in the Nasdaq or S&P, but the low from the most recent low from the peak. So that would be peak to trough, and those percentages can vary widely between major indices. But if you use those appropriately, especially in the context of the VIX and cross-index correlation and analysis, you've got an enormous edge above virtually every retail trader out there, because almost nobody's doing this. I can tell you that. We have over 50,000 members that we teach, and I can't tell you that there's been a single member who has come into our membership or our circle and has been aware of these correlations to the degree that they're using them to time major index reversals, or buying and selling points as they relate to the CBOE volatility index, the VIX. So you're giving yourself a huge advantage if you can really practice this and put it into practice in terms of overall market analysis. So just to recap, we're watching 25 on the VIX. We've seen that, and actually, just to emphasize, let me point out here where the VIX was topping out. So notice here on May 2nd, we had a VIX spike into that resistance, the 35. So this is before we started really showing resistance over like 5 trading days, back in the beginning of May. So see how the VIX spikes up into this resistance zone that we've emphasized, and then see how we have actually 1, 2, 3, 4, 5 trading days where the VIX spikes up into that resistance zone at 35. All right, so if we look at the S&P, on May 2nd. So look when we got that VIX spike into that resistance zone and the rejection and the move back down, that was on May 2nd. Look what happened here on the S&P, right? We got a sell-off into support, into that 40, 50 level. And then we got a huge rebound in 2 days up into roughly 4,300. All right, so that's how the VIX gave us forward-looking insight into the rebound into this 4,300 level. But then the VIX, continued to spike up into that level, and finally rejected it again and moved back down. Okay, so that's what happened. And if we go back over to the chart, okay, so that's what happened here. All right, and so once we see, so this was a bullish move into that zone, rejection, 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 and finally the move down. Okay, so this was our period of, this is kind of our clue that that was a major support area on the S&P after the next leg lower, and we could use that as anticipation for a bear market rally or leg up in the S&P. And further confirmation obviously came in down here over the last 3 trading days. But you can see how this can actually give us a clue or forward-looking insight into moves in the major indices. Okay, and again, this was a major resistance zone. And it's unusual to see, VIX above these levels even in bear market conditions. We typically see big VIX spikes above this zone in like a market crash, so like, COVID crash last year. We'll see those types of VIX spikes.
It's pretty interesting to see those kind of equal highs, yet every single candle, like every body of candle is just trying to get as far away from that 35 level as possible.
Yeah. And we haven't talked a lot about trade trend, our algorithm tonight, but this can also be a good confluence to use in these resistance zones for further confirmation of the of a market rebound. So see how we got a trade trend sell warning back on May 12th. Okay, that's a good sign for the rebound. We also got one way back here in mid-March before the market took off. Right, so looking for these, they don't always come in because trade trend, our algorithm, is not built around the VIX or designed for the VIX, but it is a momentum trend and volatility oscillator and an indicator. So it can still give us good clues. I prefer to use it, as we've talked in past sessions, as a kind of an insurance indicator for when the VIX is below 20 to buy protection or speculate on VIX spikes. But it also can give us further confluence of a VIX retreat off of some of these resistance zones. We didn't get one here, but that's why we don't use it as a sole indicator to tell us we want to use the resistance zone as well as any other confluence we can find, trade trend algorithm, or combining it with support levels in the S&P and watching for price action rebounds off those levels. Basically, we're in a bear market rally at the moment, I believe, and we've got some major resistance levels to be monitoring for rejection and potential short opportunities off those. But we also have really strong support levels to be watching in the major indices. 4,000 is a millennial mark in the S&P, and if we can stay above that, it's going to pump more bullishness into the S&P for the near term. So a lot of big levels to be watching right now, paying attention to, and using for decision making, and certainly in my trading and investing. So if there are any other questions on overall market analysis, we can take those now, and then we'll move into our ticker roundtable.
Yeah, I don't really see anything else coming through.
All right.
Kind of hit everything.
Cool. All right. So if you guys want to share some symbols in the chat or Q&A box, we're going to open up our ticker roundtable and look at anything you guys want to, with the caveat we can't give any personal investment advice, obviously, or tell you anybody what to do based on their individual circumstances. But it's more of a roundtable discussion to use the analytical tools and techniques and trade trend indicator to kind of share ideas and look at the current situation.
Let's see, I got a Amazon just came through.
All right. I think we looked at Amazon last week, right? Amazon's always a popular one. We get that one quite a bit.
Yeah.
So one thing to point out, we're in a red divergence cloud. So if you guys aren't Zillion members, Zillion is our charting dashboard. There's a proprietary indicator, so only available on the Zillion dashboard, that provides a divergence cloud. So green divergence, we expect to see a move up in price. Red divergence, we expect to see a move down in price. And we're kind of in the density of the cloud indicates like the strength of the move, basically. But we're kind of fading out on the red here, but still looks like maybe just slightly in a red divergence cloud. So just something to consider. Obviously, there's been a huge sell-off from around the 3,400 level into the 2,000 level. But I'm trying to remember if it was last week or week before when we looked at this. We talked about looking at the 2,000 level as a major support zone, or kind of the 2,000 to 2,100. So the analysis that we just did for the major indices in terms of the millennial and century marks applies to any security. Probably most stocks are not going to be in the millennial range, but Amazon is. So 2,000 is a big one. 2,100. Let me zoom out a little bit more here. But what I'm looking for here is some degree of buying off this level from the past. And I want to see if there were buyers coming in at these price levels in the past. Let's mark the 2,100. And then we also want to look to see if there was selling at those levels too. And selling in the past at a level isn't necessarily a bad thing if price broke through it and then moved strongly off of it. Let's actually mark this 2,000. And some of these you have to be, fairly astute about. Like this 2,000 level, surprisingly, going back a couple of years, I see some resistance right here, right there. Strong break through it. Looks like about the 2050 level. See some consolidation resistance. 2,100. Probably more like 2,150, but this 2,100 to 22 zone was significant resistance because of the sell-off that ensued from that zone. Very strong support around looks like 1,600. So that was the last major level. There was a huge move off. A support zone. That was back in the end of the COVID crash back in March of 2020. So obviously major sell-off in Amazon this year. And the question always is, where is it going to bottom and turn around? So I see a support zone here. We've broken through what was past resistance and then became support, several of those layers. And I see one here that actually could be very relevant very near term, like as soon as tomorrow. So that's just above 2,300. Let me see what the high was today. 2,316. All right, so here's what I'm looking at. So see this major kind of bullish rejection. Some might call it like a doji or a pin bar, or basically a bullish reversal off of this 2,300 level from back in looks like late April, early May of 2020. And see how we hit resistance there today? So 2,300 is a century mark. And if we look at what happened around that level, the last time it was used as a support, because right, if we're looking at a bullish scenario, we want to look at a support, not resistance. This is where it was, and there was the move. So again, past results don't indicate future performance, but if we can break through this 2,300 level, it could be very bullish for Amazon. But I would personally want to see at least a couple closes above that level. And to be extra cautious, I might even be okay with it trading, if it did, trading up from that level significantly into another century mark, like 2,400 or 2,500, and then being very patient and waiting for a pullback to use that as a support entry around 2,300. because there's not a lot of resistance above, until we get up into like the 2,700 levels, very strong resistance zone, 2,700, 2,800, and 2,900. So if this thing can break through 2,300, sustain that breakout, if it occurs, and then use that as support, we've got some really good room to move back up into some of these previous resistance areas. So lots of price action around these century marks in Amazon. Those are a good one to look at, fun to look at. And thanks for sharing. So let's take another one.
Brian wanted to see Halo, Halo.
All right. All right, Halozyme Therapeutics. Sounds like a biotech, or not familiar with this one, but not surprising for a biotech, or I'm assuming that's what it is. I'd have to look it up, but a big price move off the COVID sell-off. Quadrupled in price, more. So obviously a speculative name with a lot of volatility and price movement. I'm actually curious to see, our trade trend algorithm does really well with these types of volatile stocks. So just looking at past signals, see a lot of really nice ones, especially within the divergence clouds. Good sell warning there on November 9th, triggered on the 10th, big sell off in a red divergence cloud. Trailing stop algorithm handled it really well. Would have gotten somebody out right around 33.57 before the reversal. This is actually a good warning signal, even though it didn't come down to the entry price in the next 3 trading days. But I see a lot of really nice signals from trade trend. And then most recently, there's actually an open signal. So if you guys don't use Zillion, or aren't familiar with how it works, you can see the open entries here. So the entry would have been 39.75. All right, so that's just a little above the high of this candle, 39.75, and it's up at 44.46. So big move. Trailing stop still, in my opinion, too aggressive. At this point, I would really be using the support and resistance analysis that we do on our live weekly sessions to manage a position if I were to have taken a trade off of this signal. So let's take a look at our overhead resistance. I want to zoom out just a little here. Okay. So 45. So I suspect we'll encounter resistance around 45. I mean, if you look back here, you can see all the periods going back, over a year where the stock has found resistance at that level. And then, of course, in the context of this big move up off the 37 level with the trade turn buy, I think, that would, if I had an open trade off of this signal, would be a profit taking level for me. Obviously up to you guys if you're in a position on this, but yeah, I see some overhead resistance here, but also really nice buy opportunity. The reason I like this in hindsight, obviously, because I don't watch this stock. The reason I like this buy signal from, what was it, 1, 2, 3, 4 trading days ago. And guys, if you don't use trade trend or understand how it works, it gives you an advanced buy or sell warning. So May 12th, it gave an advanced buy warning. That doesn't mean you buy the stock or security at that time. It's going to give you an actual entry price for the future. And that was just up here, I think, what was it, 39.75. And only if the price of that security comes up into that level and moves into that level, would, in the case of a long signal, would you take a trade off that if you were going to trade the signal? So it did here. And so nice advanced warning there on May 12th, and it was off of a support zone. So again, using the exercises that we do with support and resistance. There's this big support zone off 36, 37, but more specifically off 37. And this is the key, also green divergence cloud. This is the key that I use for selecting trade trend buy sell signals, is I want to see a buy signal off a support level or a sell signal off a resistance level. And so we got, and obviously it doesn't have to be exact, but I want to see the price action reject that level and then a subsequent buy. Or in the case of a sell, I want to see a rejection off the resistance and a subsequent sell signal. So this is a really nice one. But 45 is the resistance zone.
Awesome.
That was a good one to look at.
Yeah, it was. Two good ones in a row. Bill, this looks like this is Bill from our Zillion chat room or our
Oh, hey, Bill.
moderators.
Yeah.
He wants to look at both charts look almost identical, so I'd say go with GE.
What was the other one?
Warner Brothers, WBD.
Okay. All right. Yeah, GE's gotten hammered. Of course, very solid company as it relates to financials, but it's taken a hit along with almost every other stock, right? Let's see here. Zoom out. So I'm looking for, again, for support because we've gotten a bit of a rebound. So you always want to ask yourself, is the rebound company specific, or is it kind of like a rising tide raises all ships? Like, is it because the market's going up and then everything else is going up? So those are the considerations here. That was a bit of a crooked line. Let me redraw that. Not, I would have liked to see it trade down lower into like more like 68. But we always look at these as zones. Obviously, if everything in trading and investing was perfect, it'd be much easier. So we need to be look at this through the lens of an artist, not a full technician or scientist, obviously. But I do see, yeah, 68 is kind of a stronger level, but 71 roughly. Let's see what the low was back here. Yeah, kind of around 71. Seems to be some strong support. What was the resistance here? 68.50. So I think the 68 to 70, let's call it 68 to 71 zone is significant. And as long as GE can hold that, it's got a lot of room to move up before resistance is encountered. So 85. Yeah, I think, there, I mean, there's, well, we got a close kind of around, 76.50, which I'm seeing from back here. And then let's look at the trade trend signal, because I think there's an open one, right? Yeah, so there was a triggered signal today. So the buy warning came in May 13th and triggered today, May 17th. So I think, obviously in the face of this, the bear market, the huge selling pressure that we're encountering, it's just, this is where, again, money management comes in, and we want to be cautious with position sizing and things. But I think this one has potential, for a move back to the upside into resistance, and then, support, being kind of around that 68 to 71 zone that we mapped out. So another good one, GE. Yeah, I mean, these can be great buying opportunities. It's obviously difficult because there's fear in the market, right? The VIX is up. That means everyone's afraid. And we don't know where the bottom is. So again, review past weekly live sessions, the last 2 weeks in particular, where we've really emphasized the importance of scaling and money management and things. And we'll get into that more in future sessions as well. So great one to look at. Let's take another one.
Jose wanted to see Zim, Z-I-M.
M as in Mary?
Correct. Zebra, Indianapolis, Mary.
That might be one we don't have. Oh no, Zim integrated. That's our one. Yeah, ZIM.
Yep, that's it.
Give it a sec to come out. It's weird. I have the chart on here. No, it's not. What is this stock trading at, out of curiosity?
Let me check. I'll look at another platform. It's showing 68 bucks
Yeah,
for me.
68. Yeah, closed today, 65.04.
I wonder if it might not be in the system.
It looks like it is. It looks like we got it in here. I don't know why the chart's not coming up. We'll look into that. Who suggested that?
Jose.
Jose. All right, Jose. Yeah, well, if you're on next week, remind us. Let's revisit that one. I don't know why. It's kind of odd because it's in our database. I don't know why the chart's not popping up. Let's revisit that one.
Okay. I got another one lined up. Pete, he's one of our new options on futures members. He wants to see gold, GC futures.
Oh, okay, Pete. Yeah.
Yeah.
Hey, Pete. All right. Yeah. So. Let's see. What are our futures? Let's figure what our futures. That's at. I look at so many different platforms every day. It's like, what is because Metastock, like tomorrow I'm doing a Metastock presentation. They've got different symbology. And I'm like, what? I try to remember, like, what is the symbology? All right. So. Oh, weird. I wonder if there's a data update going on right now.
Yeah, you might have to. Craig said it pulled up for him.
It did? Oh, weird. Let me refresh.
Yeah, Zim did too. So maybe.
Oh, it did. Okay. Maybe I just need. Let me try. We'll go back to GC. Let me look at Zim again. Looks like I don't think I'm having an internet problem. You guys can hear me okay, right?
Yeah.
We have storms come through here in the afternoons. You got like kind of one blowing in now. Sometimes it messes with the internet and stuff, but it's kind of like it's looking a little weird. I don't know why.
Just have to refresh it.
Yeah, well, I did. I refreshed it. It might be my internet. Oh, there it goes. Yeah, it looks like there's a internet issue at the moment. All right. So Zim, and then we'll go to GC. So bearish divergence cloud, red divergence cloud, bearish price, definitely not a buy signal I would consider. Kind of choppy price action. I really like to look for a really well-defined support and resistance. The only good support I can see here is right around 62 to 62.50. So this is kind of the support zone that I see, and price is currently above that level. So it looks like there might be a bit of a retreat with this bearish cloud that cloud pattern that occurred today that we could see back into 6250. 6250 to 61 to 6250 can hold, and we see a bounce off that. Then and if we get out of this red divergence cloud, might be lend a little bit more bullishness just on a technical level. I don't know much about this. Obviously, a shipping company. I don't know much about them on a fundamental basis, but on a technical basis, there's some strong support here. I think that if price can stay above that zone and we can get out of the red divergence cloud, there might be some opportunity for further move to the upside. 6750 at first glance is our real strong resistance. So we actually that was rejected today. So very near term bearish on this one, but you can see there all the price action around that 6750 level, including today, false breakout of 6750. And that's why I make a lot of my decisions on the closing basis of a security, not on intraday, because that's what traps a lot of people. This looked like today a breakout of 6750, and it probably trapped a lot of longs and benefited the shorts there. So 6750. So all right, well, let's look at gold real quick.
Yep.
I don't know what is going on with my. Just click on that. There's got to be an update rolling through. There we go. All right, let's see here. So we're looking at gold futures. And bullish on gold futures. So I think that gold has sold off into a strong support area. And go ahead and map this out for you guys. So very strong support resides around 1780. We didn't quite reach that on the reversal today, but you'll notice that we haven't in the past either, where we've seen large blocks of buying occur just above 1780. So that happened back in December and early this year. And then here back in August, and then as well earlier, or kind of mid last year. So very strong support. And then, of course, in the context of, remember the questions we ask ourselves, where did it come from? Where did it go? And then where is it going? So it came from way up around the 2000 level. So that is a millennial mark. And we've got a bit of a head and shoulders pattern. So more medium term bearish, but near term, I think, over the next several weeks, bullish. We've had a parabolic sell-off into a very strong support level, and suspect there's a high likelihood of a bounce from around the 1780 level back up. All right. Well, thanks everybody for sharing all those great examples. Those were really great ones to look at. We are Richard, do we still have the special running for Zillion? Obviously, guys, tonight I was using our proprietary Zillion dashboard with our divergence cloud indicator, trade trend, buy and sell signals, and trailing stops, and all of our really cool features that include trade alerts and statistics. I didn't demonstrate a lot of that tonight, obviously, but due to the limited time. But are we still running the special?
I think we are. I believe it's still up until we roll out the new updated pricing.
Okay, is there a link that we can give people for that in the chat, or?
Yeah, let me see what I can find. I had the other link for the Saturday thing lined up. Let me get that.
Okay, well, if not, we can, if you guys are interested, we're doing a $49 a month special for our Zillion tree charting platform. And again, that includes the the divergence cloud indicator, the trade trend indicator, all of our scanners, sector performance, statistics, and you can also create custom watch lists and get trade alerts from our buy and sell signals emailed to you. So a lot of incredible tools built into that. And we're taking 50% off at only $49 a month. And that's a grandfathered membership. So if you join at that price, you would never pay more. Really great deal. If you want to learn more about Zillion, you can go to zilliontree.com. And if you have any questions, you can email us at support@altostrading.com. And I don't know, Richard. Thanks, Alfonso. Thanks, everybody. Yeah. Let's see.
Let's see here. Also, want to just remind everybody what we're doing on Saturday. We've got our.
Yeah.
You want to go ahead and tell them?
Sure. Yeah. So we're hosting an event with some of our colleagues that do trading education. It's free to attend. It's a free event, and it's educational. So you can learn. What do we have? 5 or 6 different speakers.
Yeah,
I'm also
5.
going to 5. Yeah. So I'll be speaking on relative strength and how to use relative, kind of a unique approach on relative strength, Saturday morning. And then the other speakers will have different topics, but they're all going to be relevant to current market conditions. So Richard just put the link to register for that, but it's entirely free. You can come and learn and enjoy and ask questions and things. So again, that's this Saturday, free to attend. And then
I did find the link for the Zillion, so I'll put that in there too.
Okay. Yeah. And then Richard will post the link if you guys are not Zillion members and you want to access all the really cool features and tools that are in the Zillion platform. It's all cloud-based, so you can access it from your mobile devices, your phone, your iPad, or anywhere that you have an internet connection. So we're running that special. I guess it's kind of probably through the end of, what is it today? Tuesday, through the end of this week. And then that'll go back to the full pricing. So if you want half off, it's a great opportunity. Zilliontree.com. All right, guys. Well, thanks so much again. Thanks for all your participation. And thank you, Rosemary. Have a great week yourself. And we'll see you guys. Stay tuned for next week's. I've got some travel coming up next week. I'm not certain we're going to do Tuesday next week yet, but we'll send out a notification on the exact day and time for our next session. But we'll see you guys very soon. Hope you have a great rest of the trading week. This is recorded and will be available to you guys to review, and as well as posted in our YouTube channel. So thanks again. Have a great rest of the week. Thanks, Richard and Craig, for moderating and hosting, and we'll see you guys all very soon. Take care.